So what up, guys? I want to do a very quick breakdown of this gold trade that I took today. And you can see I shared it with my people on my Instagram. I took this sell from here and I got out from here. So now let's do a very quick breakdown of it. Looking at this chart right now, let's go to higher time frame right now. Let's go to higher time frame. So looking at this higher time frame perspective, you could see that this price literally was going low, was going a low to a high. So at some point, structure was broken. So when structure was broken, that means we are in a sell environment. So knowing the fact that I'm in a sell environment, that means I am looking for sell. But you guys should remember, in my last video, I explained something about a breaker block, which is when a market aggressively violates a LD supply. So that means the market will come back there to mitigate it, then create a new high. So looking at this guy, you can see that based on internal structure, because these two guys are what major structures. Based on internal structures, we have this low to this high, this low to this high, this low, then to this high. Then all of a sudden, the structure got broken. Remember, based on supply and demand, the market is supposed to buy from here. But the market refused to buy from there. So now, the fact that they now violated this demand, this point is now what? You can call it a breaker block. A lot of people call it different names, but a lot of people call this thing different names, but that doesn't matter, because at the end of the day, it is not the name that matters, it is what? The concept that matters. So now, after the market got to the breaker block, like I told you guys, be more of a conservative trader than what? A predictive trader. What do I mean by that? So when the market got to the supply, you can see as big as it is, and imagine this is gold. How many stop loss are you planning to use? But when the market got there, I was waiting for confirmation. So remember, based on the bigger picture, this was the template that was used. Sorry. This is the breaker block, then boom. But there's something I want you guys to know about the fractal nature of price. Whatever happened in higher time frame can also happen in lower time frame. So if this happened in higher time frame, so now let's look at this lower time frame together. We have a low to a high, a low to a high, a low, then to a high. Sorry, a low to a high, then a low to a high. You can see that. So this point is supposed to be a demand that the market is supposed to buy from. But as you can see, the market aggressively took it out. The market aggressively took that point out, giving us this same pattern. So taking it out, that has actually created a what? Another breaker block. So which means that point has now given me a confirmation for me to sell. And that was how I was able to get in on this sell at the breaker block. So in a drawing perspective, let me annotate it for you. We have, on a higher time frame perspective, we have the market did this breaker block. And when market got here, right? So the market got here, then all of a sudden, this same bigger picture now happened as a smaller picture, as another breaker block right here in a smaller picture. Then the market came to mitigate it, and I took my sell to target a new low. Which means this does not necessarily have to be all about breaker block alone. It can be any strategy. Whatever you use as your point of interest, whatever strategy that you use can also be used as your confirmation. Be it trend line, be it Quasimodo, be it head and shoulder, whatever you use for your POI can also be used as your confirmation entry. So which is why you need to understand the fractal nature of price. Market can decide to give me any type of confirmation, but this time around, it decides to give me the same confirmation that I got on the higher time frame that generate the point of interest. The market decides to give me the same thing as my lower time frame confirmation. So which means, let's say
Here's how you can start trading smart and finally pass your prop firm challenge. If you're 18 to 35, listen up. First thing you're going to do is grab the Pips Gravity Mastermind trading plan, link in bio. Once you're in, go straight to the market structure section so you can finally read the charts like a pro. Next, dive into the liquidity and fair value gap chapters. This is where you'll learn how the big banks move the market and how to catch the move before it happens. Then, use our entry technique guide to time your trades with sniper accuracy. No more random entries, no more gambling. Finally, follow our trade management steps to protect profits and scale your account steadily. If you're tired of blowing accounts and failing challenges, this is your wake-up call. Pips Gravity Mastermind. Get it now and start trading like the top 1%.